One of the most common comments/questions that I'm getting right now is that market valuations seem to be very high right now, and there are very few stocks trading below their intrinsic value, and I actually completely agree with this comment. If we look at the S&P 500 over the past year, it's up around 21.34%, and it recently hit an all-time high a little over $500 per share. So again, where are the opportunities in this market right now? Well, if we look at the return of the S&P 500 over the past year versus VNQ, which is Vanguard's real estate index fund, we can see a pretty massive difference of a little over 28%. VNQ is down around 5.75% over the past year. Again, S&P 500 up around 22.37%. Now, just a few months ago, the Fed announced that it is likely we will see interest rate cuts in 2024. And because of that, you can see here we saw a jump up in the share price of the S&P 500 and especially the VNQ. But since then, the Fed has announced that it's likely they're going to hold off on doing this for just a little while, causing the VNQ to start to decline while the S&P 500 continued to climb higher. Now, obviously, it's always fun to see our stock prices go higher, but I love seeing stocks and indexes go lower because that typically means there could potentially be opportunity. And when we look at the heat map of the S&P 500 over the past year, you see green pretty much everywhere. But if we come down right here, we can see real estate. There is a lot of red in this area. And as I look further into this industry, this seems to be where the most opportunity is right now. And one of my stocks within the real estate industry right now is Vici Properties, stock ticker VICI, currently trading at $29.48 per share. Now, over the past year, they're down 13.52%, and year to date, down around 7.53%. Now, this company has a very nice starting dividend yield, sitting at about 5.62%. So in this video, we're going to be taking a deep dive into this company, talking about some of the things I like about them, where their real estate is located, how their leases are structured, and of course, jumping into my REIT valuation spreadsheet to see if we can find the fair value of this company. So if you'd like to be able to download this spreadsheet or any of my other spreadsheets, then you can head over to my Patreon page at the link in the description. But let's go ahead and start diving into this company. Now, before we look at the financials and the dividend metrics for this company, let's go ahead and take a step back and talk about the real estate that this company owns. In my opinion, this company owns some of the highest quality real estate, with most of it being on the iconic Las Vegas Strip. We can see here, we kind of have a map where this red line here is showing the Las Vegas Strip, and these orange squares are real estate that Vici Properties owns. We can see they own iconic buildings such as Caesars Palace, the Venetian Resort, the new MSG Sphere. And so you can basically see Vici owns property everywhere. Now, in my opinion, this is a competitive advantage for Vici, but at the same time, if you look at it from a bearish perspective, some people could argue this is a potential threat to the company. But here's why I think that argument falls through. There is essentially no place on earth like Las Vegas. Not to mention, tourism has exploded over the past few years at Las Vegas. In fact, if we jump over to a recently written Seeking Alpha article, which you can see was actually written by me, so follow me over there if you are on Seeking Alpha. If we scroll down, we can see Las Vegas total visitors compared from 2022 to 2023. And overall, we saw a 5.8% increase in Las Vegas tourism. And while tourism in Las Vegas is growing, so is the demand for professional sports teams. We can see Vegas has now what's known as the Sports Triangle with Allegiant Stadium. And keep in mind, Allegiant Stadium just hosted the most recent Super Bowl, driving even more tourism to Las Vegas. We can see they have T-Mobile Arena and they have the new proposed A's Stadium. So in my opinion, Vici currently owns some of the highest quality real estate in the United States. Now, this is definitely not the only thing that makes Vici Properties so special. In fact, I would argue it might not even be the main thing that makes them so special. One of the things that I actually love about this company is that 100% of their tenants operate under what is known as a triple net lease REIT. Now, what is a triple net lease REIT? This is actually something I broke down in this article as well, and it's really important to understand if you're interested in Vici Properties. Triple net leases are leases in which the tenant is responsible for paying all of the property's expenses, including real estate taxes, building insurance, and maintenance. This makes the REITs very attractive to investors because they offer a steady stream of income with very little risk. Now, that's important, very little risk. The risk is transferred to the tenants instead, so 100% of Vici's tenants operate under a triple net lease REIT agreement. So this is a massive deal for Vici. It creates predictability and stability when it comes to their expenses and also their cash flows. And if we keep scrolling down, a couple of other key metrics that we have to point out is look at their 2020 rent collection. They were able to collect 100% of their rent in 2020, meanwhile other real estate investment trusts struggled to collect rent during this time period. We can also see while there are still a few variables at play here, the remaining lease term could be around 42 years, a boost to the predictability and stability of those cash flows. Now, one problem a lot of REITs have is dealing with inflation, but inflation is accounted for with the structure of VICI Properties leases. We can currently see in 2023, 50% of VICI's rent roll had CPI protection. And this essentially means that if inflation were to increase, then the amount VICI collects in rent automatically increases as well. But look at the increase in this over time. By 2035, it's projected that 96% of VICI's rent roll will be CPI linked. So think about that for just a second. They have some of the highest quality real estate in Las Vegas. They have very predictable expenses, reliable cash flows even during a time of pandemic, and they also have inflation protection. In my opinion, those are some pretty attractive metrics for any real estate investment trust. Now, obviously, the main reason most people invest in REITs are for the dividend. And we can see, like I mentioned earlier, they have a nice starting yield starting at 5.62%. But ideally, I obviously want to see sustainability in those dividend payments and dividend growth if possible. So if we jump over to the dividend history tab here on Seeking Alpha, which by the way, you can get a link to in the description, you can see a nice history of slightly increasing those dividend payments over time. If we go over to the dividend growth tab here on Seeking Alpha, we can see the 3-year dividend CAGR sitting very nice for a real estate investment trust at 8.66%, in the 5-year actually sitting at 10.05%. So really nice dividend growth, especially from a REIT during this time period. Now, if we jump over to the dividend safety tab and we look at the payout ratio, what we want to look for is the FFO payout ratio because we're looking at a real estate investment trust. And we can see forward looking for VICI, it's sitting at about 67.77%. That's a pretty healthy payout ratio for a real estate investment trust. So from a dividend perspective, there is a lot to like about this company. And from a lease structure perspective and real estate location perspective, there's again a lot to like about this company. So in my opinion, this boils down to one thing. We need to look at the current valuation of the company trading at $29.48. And to answer that question, let's go ahead and jump into my REIT valuation spreadsheet and look at a few different valuation models. Again, like always, you can download this on my Patreon page at the link in the description. But let's go ahead and come up here and plug in VICI and hit enter, and you can see all this data will automatically load in. Now, we've already touched on the dividend metrics. We can see institutional ownership is very high, beta of 0.9, so you'll typically see a little less volatility than that of the market. Now, the first valuation we'll run this through is the AFFO multiples valuation. And essentially what we're doing is we're seeing how the market is valuing companies that are similar in structure by looking at the price to AFFO multiple. And you can see the average price to AFFO multiple of these comparable companies sitting at 18.84. Now, VICI's current price to AFFO multiple is sitting at just 13.75. So if you were to apply the same price to AFFO multiple to VICI Properties, you come to an intrinsic value of $40.39, quite a bit higher than that current trading price. Now, the next valuation we'll run this through is the dividend discount model. This basically values a company based on how much they pay out in dividends and how much that dividend is increasing over time. So I plugged in the historical data and we can see these year-over-year dividend growth rates, which are pretty solid again for a REIT. Moving forward, I'm projecting a dividend growth rate of 4%, discount rate of 8.5%, and we come to a dividend discount model price per share of $38.36. So when we jump over to our output tab, we can see the two valuations that we used here, AFFO multiples at 40.39 and dividend discount at 38.36. This gives us an intrinsic value of $39.38. Now, the current price is sitting at about $29.48. So with a 10% margin of safety, the acceptable buy price is sitting at $35.45. And with a 20% margin of safety, we have an acceptable buy price of around $31.51. So in my opinion, this is currently one of the best opportunities in the market. While the valuation for most of the stocks within the S&P 500 remains pretty high right now, real estate investment trusts appear to be one of the better opportunities as of right now, and more specifically, in my opinion, VICI Properties. Now, complete transparency, like always, VICI Properties is a company I hold in my personal portfolio. And if we look right here, you can currently see it makes up around 2.7% of my personal dividend portfolio. But there you go, there is an analysis on VICI Properties. Go ahead and let me know what you think of this company in the comments down below, or if you think there's any other companies that are trading at a good value. Like always, if you'd like to join a community of dividend investors and get access to any of my spreadsheets, then you can head over to my Patreon page at the link in the description. So that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.